Options trading started at SIBO with contracts that expired every month. Then it moved to options that expired every week. Now options that expire in one day are really catching on. Who better than the day trader, Mike Shorr of Prosper Trading Academy, to give us a handle on these fast trades. Mike, the Wall Street Journal reports that when amateur traders get into these options, sometimes it's just gambling, but it doesn't have to be that way. As a pro trader, what would be your warnings or suggestion with one-day options?
My first thing with trading equity options overnight, one thing is that you're going to think that you have the liquidity that you have during the day, and you just simply won't until the market gets to a point where, yes, these are going to trade essentially 24 hours a day. And so you could have all the best ideas in the world of how you're going to play this overnight, but the liquidity is not there. So it's just kind of like trading that 15 minutes after the close that you can still trade SPY and Q and IWM overnight. You think that the liquidity is there, and it just won't be. So I would be very careful. One thing that it will afford traders is the ability to hedge overnight.
Reports do say that big investors and bank traders are taking advantage of one-day options because it's a way to manage risk and hedge, say, the inflation numbers coming into the market or the jobs report. What would be your example of hedging or protecting your trades?
So let's just say that, I'm long a bunch of stock and it starts to move. I can pick my levels and I can sell call, let's just say that I'm long the underlying. I can sell calls. I can buy puts, and you just really can't be all that price sensitive just because you're not going to have a 2-cent wide Q market, and you're not going to have a 1 or 2 cent wide Apple market. So it'll afford you to be able to hedge, and especially on something like earnings, where, the hard thing is, let's just say I play something on earnings, and I have shares to sell or deltas to sell against the position. You can do that, and you're not so price sensitive. And so that will be good. But trying to, let's just say, day trade those things, you're going to have to really widen out your parameters as far as risk is going to go. And I certainly wouldn't go with any sort of full allocation, what you're used to during the day.
Good information. Thank you, Mike.
Well, thanks a lot for having me.
Go to businessfirstam.com for where to see our show on TV.